What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 1st of 2019. Well, folks, I hope y'all are having a fantastic day wherever you are, and in today's video, we've got a few key topics to focus in on, but more predominantly, I want to focus in on a very important topic that many of you might not be aware of in the cryptocurrency space. It's something that for the first time in 10 years has happened, and it's the Federal Reserve, or the central bank of the United States, deciding to cut interest rates. Now, this is not only very important to take into account for stocks and traditional asset classes, but could serve as continued fuel to the fire in the already impressive Bitcoin rally that we've seen in 2019, and that I think we'll continue to see throughout 2020 and possibly 2021. So we're going to be talking about that in this video and explaining why that is so important. Something that seems so boring and mundane is actually extremely relevant to Bitcoin's price. All right, guys, so we've got lots of things to discuss. Let's not push it off any longer right after our quick sponsor. Our sponsor for today's video is CoinDeal.com. CoinDeal.com is one of the largest crypto to fiat exchanges in Europe, and they're giving away over 90% of all their tokens to users who register on their platform. Whereas most projects only give away 5 to 7%, this is a massive giveaway for early adopters of the platform. It doesn't cost anything to register an account, and you can sell or hold onto the tokens after it launches. Check out the link in the description for more info. Alrighty, everyone, so let's go ahead and spend some time to take a look over the market. As we can see, most cryptocurrencies are in a no trend scenario between 1 to 2% to the upside or downside. However, more players are definitely in the red at the moment, giving some leeway for Bitcoin to regain some of its market dominance. And Bitcoin has been playing a bigger role in the sense of helping us set higher lows and eventually, I believe, higher highs here in order to confirm that we're reversing the trend. I don't think the correction that we're in is going to last for much longer, guys, as much as I would love it to, so I could buy much cheaper prices. I really don't think that's the case. The moment we start to get a close on overall market cap around 290 to 295 billion, I think that's going to be the confirmation that the trend is reversing. Very simple, easy principle, and we can see that as well. Bitcoin dominance is gaining here quite nicely over the last few days. We're only about a 1.5% away from the relative highs this year for Bitcoin dominance. It might be that third time's a charm. We need to set up a third high. We have two previous highs here. Might be going for the third one here. So again, if you're in altcoins, guys, make sure you're in plays that you're confident on. All right, so we've talked enough about that. I don't want to talk too much about prices or specifically so much the crypto space. We'll kind of lead into the crypto space as time progresses in this video. But I really want to talk about this, guys. I know a lot of you out there don't really keep up with like the kind of whole macro perspective of economics. You couldn't care, give two craps about the stock market, whatever. But the thing I want to talk about today has relevancy across the board. It could be very much fuel for the fire in this continued rally we've seen in Bitcoin. And it's because it has absolutely everything to do with Bitcoin and traditional fiat currencies. And that is the Federal Reserve deciding to cut interest rates. Now, before we even talk about why this is significant, we need to understand what an interest rate is, okay? So when I talk about an interest rate, as you guys probably know, that's usually either a cost to something, right? It's the cost to borrow something, or it's what you usually get as a yield if you're putting money in a savings account, or if you own a treasury or a bond or something. It might be 1 or 2 or 3%, right? In some cases, it can be negative, crazy enough. But anyways, in this example, what we're talking about is the federal funds rate. This is the Federal Reserve's rate that it manages on the cost of capital. And it basically is, it's kind of the base cost in this case, what capital is going to cost. You're probably going to pay a higher rate at your commercial bank because they need to make a profit as well. So they increase the interest rate. But in this case, we know that this is basically the underlying cost of capital in an economy. And for the last, set a few years, if we take a look at the last 10 years, between 2009, the mid part of 2009, all the way up to the end of 2015, interest rates were practically zero. The cost of capital was dirt cheap. And it's what helped stimulate the economy after 2008. After we had the housing recession, we had the credit bubble, and the mass amounts of layoffs. The only way that the Federal Reserve saw fit to stimulate the economy was to make the cost of capital practically zero at its base level. Not to mention, this was not just what the Federal Reserve did. It's what most central banks across the world did, from the ECB to all kinds of areas, the Bank of Japan, all kinds of areas across the world brought rates down to near zero. Or if not that, very, very low interest rates than what they had seen historically. And for the United States to do this, I mean, this was pretty significant. This was new uncharted territory for monetary policy. And we had not seen rates this low since the early 1900s during the Great Recession. hence why a lot of people compare, what we had in 2008 to being the worst recession since the 1920s and 1930s. So, or sorry, the 1930s, because the 1920s was the roaring 20s. That was the bubble. Anyways, enough rambling on that. Since 2016, throughout 2019, we've been on a course of reversing monetary policy. We had gotten to a point where equity markets, housing valuations, and the broader economy, to be fair, had seen an increase in the employment numbers, a drop in unemployment, and have seen more people return to the workforce in an economy that has seen some growth. So because of that, the Federal Reserve was at a steady rate, continuing to increase interest rates every few months. And you can almost see it's a nice, steady uptrend line here until here in 2019, we started to plateau. The trend started to change. And as of yesterday, the Federal Reserve decided that in the month of August, that they were going to cut interest rates by 25 basis points, basically a quarter of a percentage. Now, that doesn't sound like much. It doesn't sound very significant, but it sends a very clear signal of reversal in trend. And it sends a sign of weakness to the broader economy, not only for asset markets, but for the US dollar, because as you cut interest rates, you are going to create more capital, right? It's going to stimulate the creation of more credit injection into the economy. It's a very fancy term for more money, right? Because capital becomes cheaper to make. That means higher inflation rates. That means more devaluation of your savings. And that's exactly what the Fed decided. They believe that in the interest of the economy, there needs to be more credit injection, right? There shouldn't be, new ways to, for example, incentivize investment in the real economy. No, we just got to make capital cheap so we can keep on propping up stocks that don't actually measure economic value. We're going to keep on propping up, other assets like homes and properties that most Americans already can't afford, just to keep that bubble going for a while in order to maintain the longest economic expansion in history. Sounds backwards, right? Well, that's exactly what we've been doing for the last decade, and it seems like the Fed wants to continue doing that. But this is very significant for cryptocurrencies because this is the first time in 10 years we've seen this. Bitcoin has really, never lived through an interest rate cut like this. I mean, you can maybe say in its very early days, Bitcoin possibly did, as Bitcoin was being founded in 2009. But you'd have to, I guess, kind of line up the dates here with the last interest rate cut being in June of 2009. Bitcoin was in its infancy. We didn't really have Bitcoin markets. We didn't have an audience of people who owned Bitcoin. So I would be safe saying that this is really Bitcoin's first time through an interest rate cut. Now, why is this valuable? Well, as we just mentioned, this increases the supply of US dollars in circulation. It is bound to do it because people who, for example, and I'll give you a good example of this. Money comes in many different forms. It usually comes in the form of debt and credit. So when we talk about a business, for example, that might say, I have an idea for business and I believe my business can make 2.5% profit every year, right? There's a lot of businesses that would reach in that category. Actually, a lot of retail grocery stores, for example, will only make a very thin margin like that. They cannot make money when they cannot borrow capital if the interest rate is 2.5% because it's going to be break even for them. Even if it goes above there, especially, they're not going to be able to borrow capital because they won't be able to pay down the interest rate on that capital, right? And that's assuming they're going to make 2.5%. So when interest rates cut down to 2.25% or maybe 2% or go even lower than that, down to say 1%, the grocery store can now actually borrow capital because in that case, the cost of credit is cheaper than what they're actually going to be able to make in their profit margins. They'll be able to pay down that interest and walk away with the profit, right? So this leads to more people borrowing. It leads to more capital or credit in the economy. And this is what leads to boom and bust cycles. Now, again, we lowered it all these years to hopefully stimulate the economy and then allow for us to get back to a period where we can have interest rates higher. But we're obviously seeing that if we take a look at the historical chart here, we can barely get up to the levels we were at back between 2005 to 2007. We're topping out just like we have ever since the 1980s in each cycle at lower levels. Now, this is really good for Bitcoin. Again, because we're getting to the point in time where they're going to have to make capital so cheap, in this case, to stimulate the economy, that it's going to lead towards mass credit injection. It's going to make the dollar, as well as other fiat currencies, much more diluted in their value. Bitcoin, in that case, is a hedge. with a finite limited supply at 21 million coins, you will be able to counteract that inflation. Sure, there's a lot of speculative value to Bitcoin. Bitcoin can speculatively gain a lot of hundreds of dollars of value today, and it can also lose hundreds of dollars of value tomorrow. But in the longer term perspective, Bitcoin is that hedge that you can utilize, similar to gold and silver, that does not inflate at these crazy rates that are dictated by a central bank. They are dictated by laws of economics and science. In the case of gold, there is a limited supply produced under the earth, right? Well, sorry, not produced, it's technically stored under the earth in this case, in the case of gold and silver, right? But in the case of Bitcoin, you go even further than that. You have that limited supply, not just limited, but it's finite. You know there will never be more than 21 million coins, many of which are lost. So this is something here. We can see that the Dixie, this is an index of the dollar, has been losing its ground over time. We've been making lower highs here over a multi-decade period. And you can see the general trend line here is that we've been losing our kind of stance on the world stage. The dollar used to still, it still is the world reserve currency, no doubt about that. But the fact of the matter is that we have been losing our ground over the last few years as the world is industrialized. And not to mention, as we have continued to hyperinflate our currency, in this case, to stimulate U.S. markets. And as Pierce Richards here says on this chart here, this logarithmic chart, Bitcoin over time makes exponential gains because it is the ultimate effective savings technology. It is a deflationary currency. It is a great currency for those who do not like to spend, who like to store wealth away. And that should be something that everyone does. Everyone should own, in my opinion, that everyone should own a little bit of Bitcoin. All right? It's not the be-all. You don't have to have all your money in it, but it works as an effective means to hedge against inflationary currencies. Not to mention as well, Bitcoin obviously gives off better returns, right? So this is another thing that people are looking for, the kind of exponential worth of returns. And not to mention you have other macro factors like the $13 trillion worth of bonds that are negative yielding. So as I kind of hinted to earlier in the video, there are a lot of bonds in the world right now that are negative yielding, which means that you are literally paying an interest rate in order to hold those bonds, right? The opposite is usually true. It's usually you get paid to hold bonds that are IOUs that say, hey, we'll pay you back this amount of capital at a later date. No, nowadays we live in some weird fake reality where you can have $13 trillion of negative yielding interest rates on US or on treasury notes from all kinds of different governments. Doesn't make sense. But those people who realize that they're actually having a negative yield from those are going to want to reallocate their capital into other assets like cryptocurrencies. Sure, cryptocurrencies might not yield an interest rate, but they're yielding great returns, and they're obviously not negative yielding. So your benefits start to outweigh the negatives of the current asset you're holding, right? Not to mention the better economics in this case. I think we understand, if we take a look at Japan and some of the other major world economies, especially the Eurozone as well, we know that there is a lot of faltering aspects of their economy, not only the negative yielding interest rates, but the sheer fact that we're not seeing economic growth in these economies because we don't have sound money. I think is a very clear and prudent signal that something like Bitcoin is important. It's relevant in our world economy, not only for savings, but also for real actual measurement of what currency is worth. So again, these are some of the few features here. Now, guys, I want to talk about inflows and outflows of markets. Sure, this all sounds great on paper for maybe Bitcoin, but where's the money going to come from that's going to make Bitcoin worth more? What's going to drive up Bitcoin's value? Where's the capital going to come from that's going to add fuel to the fire? Well, it's most likely going to come from assets. When I take a look here at how the market reacted, this is the hourly candle from 2 p.m. yesterday, from when the Federal Reserve had its FOMC meeting and announced that it was going to be cutting interest rates by 25 basis points and decided that it's not going to increase them much anymore. Now, we will have to see. Time will tell if that is the actual case. I don't think Powell will be able to, Jay Powell, who's the Fed chairman, will be able to say that much longer as of how the market reacted and how it will continue to react. Give it a few days. We'll see how the market continues to react. The fact of the matter is that the Fed seems to be in a catch-22. The Fed wants to satisfy equity markets, wants to keep the expansion going, and that's why it cut interest rates by 25 basis points yesterday. But it's decided, at least as of now, that they're not going to cut rates anymore after this. This is a one-off event where many people in the market, some of the mainstream investors here, we can see it in the price. The majority of investors thought, oh, wait a minute, I thought this was going to be multiple rate cuts in 2019. I thought this was going to be more cuts into 2020, and I thought we were setting on a course to possibly even reintroduce quantitative easing. No serious mention of that from the Fed chair. Oh, he might have mentioned it once or twice, but there was nothing in regards to the confidence signal of, yes, we're going to be using these frames of monetary policy. We are going to continue cutting interest rates or reintroducing quantitative easing. And markets didn't like that. It's like the spoiled kid who won't take the piece of candy you give him. He needs more, right? It's like they'll never be satisfied. And that's the issue here. The Fed is going to have to determine what it wants to do. Is it going to keep on cutting interest rates, devaluing the dollar en masse when it's already losing a lot of its ground to other currencies, giving up this one opportunity to have strength of the US dollar, which we've seen over the last year in 2019 and 2018? Or are we, going to actually, give strength to the dollar, let equity markets take a hit, try to provide some purchasing power strength to the dollar? Who knows? Powell's been in this catch-22 for a while. He's been given kind of the hard decision here, him and the Fed currently managing this. And we can see here that, again, as we take a look through his comments, he quotes, we're thinking of it as essentially in the nature of a mid-cycle adjustment to policy. So Powell believes that this is not going to be a 2008. I don't know. I wouldn't say that it's going to be per se a 2008, but because it's much different factors at play here than the housing market, just simply speaking. He believes that this is a smaller cycle, very similar to the 1990s. And, I disagree with that in some regards, but the fact of the matter is Powell doesn't really care what I have to say. The issue here is that you are either going to have one of two things. You're going to have a dump in equities as you continue keeping interest rates at these levels. It's just not sustainable because the underlying economy right now both the underlying economy is so broken right now that they can't manage higher interest rates. People can't borrow mortgages at these rates right now because people just don't have the capital for it. And along with that, we've used every single means to prop up equities this high. What else can we use? If we start increasing the cost of capital, what else is going to keep propping up this legitimate Ponzi? This is a gigantic Ponzi scheme. Most people are in equities right now. Like maybe you've got some mom and pops who maybe haven't invested in the stock market will put a few $100s in. That's not going to keep up the trillions of dollars in tech stocks that have been propped up over the last few years. What have you got? What have you got in your weapon and arsenal? The Fed doesn't have anything. The last thing they can do is start buying up assets directly in the market, which is what we've talked about them doing. And again, that's going to lead them on the other side of the catch-22. They're going to debase the currency supply so dramatically. And that is going to lead towards Bitcoin going up higher. Even Tom Lee, for example, and I love Tom Lee to death. I can have no doubt he loves making price figures. Both him and I have a bad track record of making price figures for Bitcoin. The fact of the matter is he believes that by the year end, this is going to push Bitcoin to 20,000. And I'll be honest, I think it could go up to 20,000 by the end of the year. We've still got a few more months. Bitcoin doubling in that time frame, I can definitely see it. With the momentum that we've had this year, if the Fed keeps cutting rates, yeah, I can 100% see it. We've already seen it in gold markets and silver. Gold and silver have been killing it this year. Don't think that Bitcoin won't follow suit. It's already the best performing asset. So I guess, gold and silver are probably following suit in that matter. But I think Tom Lee's right on this. I think he's absolutely right. There is nothing more important that's going to fuel the fire to Bitcoin's rally than monetary policy, than the failure of traditional systems to show Bitcoin is a hedge. And this is something as well that's been talked about. Anthony Pompliano just talked with Peter Schiff as a recent. This is a big debate, the golden debate of our era between Anthony bullish 24/7 Pompliano versus Peter, I own some Bitcoin, but I'm bearish because I want to support gold, Schiff. Coming through and having this really interesting debate. Now, I've been meaning to actually go through and listen to some of the debate, but the big point here is that CNBC hosted this debate, and they had a discussion between the two. And Anthony really talks about how, Bitcoin, in a sense, it is the ultimate evolution of money, guys. It still, at this point, probably isn't great currency, but as money, as a store of value, as what Peter is looking for in the sense of gold, Bitcoin is all of that and more. It's digitally transferable, globally transferable, borderless currency. It has a finite supply. something with these properties, not to mention its censorship resistant nature, where I can send that value anywhere across the world without anyone's permission, peer to peer, and have sole management of my money without the need of a bank account. You want to talk about a perfect solution to this storm of a financial disaster that's been built up over the last few years? A system that, from conspiracy-ridden families like the Rothschilds all the way to prominent figures that we follow in the economics and financial system, have stated is one of the greatest monetary experiments in history. That is the management of interest rates down to zero or negative interest rates. I think a lot of that is going to shape up the environment for Bitcoin over the next few years. And I know where my cards are. I know where I'm overexposed, and that's in cryptocurrencies. I'm excited about this space. I'm excited to see where we evolve cryptocurrencies to and getting it into the hands of more people. There's not much time, guys. We really need to focus on how we can make this technology practical and how we can get it into the hands of a lot more people than it already is. But I feel a lot of that will come in due time. Anyways, guys, that's it for the video. Thank you all so much for watching. I hope you guys liked this macro video. If you liked it, type hashtag macrofinance. I don't know, it's kind of a big hashtag, but put it down there if you guys stuck around to the entire video. And if you could, drop a like on the video. I always appreciate it. I'm glad you guys, if you guys enjoyed this, I'm glad you enjoy it, because this is some really substantial, important stuff. I hope you guys spend the time to do some research on this if you're new to it, because it's not only very important, it's very exciting and fun to learn about. At least it is for me. It's a fun topic. All right, guys, well, you have a great day. I'll see you guys tomorrow on the next video. And until then, hope you guys have a wonderful rest of your day. Stay tuned.